First of all, for people who are joining us, my name is Steve Murray. I'm president of Real Trends. We're honored today to have on the screen, which hopefully you all can see and hear clearly, Gino Blefari is the CEO of Berkshire Hathaway HomeServices. He is sheltering at home today in Northern California. We have Hanna, who is sheltering runs an operation based in Pittsburgh, but is sheltering where it's warm in Naples, Florida. Robert Reffkin, CEO of Compass, is sheltering somewhere east of New York City in hopefully a very safe place. And Matt Widdows, CEO and founder of HomeSmart, is sheltering at home in Arizona. So gentlemen, welcome. And we have an hour and we're going to go ahead and get started. As I said, we are recording this and we'll provide it to each of you and also to people out there who are listening. We can provide recordings of this also later. I have just 4 questions for these esteemed guys today. I will start, Gino, alphabetically with you. The first question is, what is the biggest challenge you think is facing brokerage companies right now?
Well, Steve, what I see is basically uncertainty, regarding the public, the family health, the job, and financial security, which can cause stress and anxiety among employees, agents, and consumers. And we understand this. These are unprecedented, turbulent days. Our entire leadership team is focused on providing employees and agents with clear guidance so they can safely and with confidence support consumers throughout today's transaction process. As you know, HomeServices, we're in the brokerage business, we're in the mortgage business, we're the title business, insurance business, and a host of other businesses. And, so that makes it, in some ways, it actually makes it a little bit better for us because the title and mortgage was already considered an essential business, okay? Now with the residential and commercial real estate services, being included in that, that's helpful. And really, we're grateful for NAR's leadership in accomplishing this for our industry. So it's just the uncertainty would be the answer to this first question here.
Robert, how would you answer that same question?
Look, I think there are probably 2 greatest challenges. One is I think every company, every business in the country that isn't benefiting from this should be thinking about their expenses. And I don't see this as a short-term blip. I see this as lasting, having an extended impact on all of our financials. I have a coach that I talk to every week. He only works with founder CEOs. And what he said is he's shocked how many of his people are trying to avoid the hard decisions around reducing expenses. And so I think, every company, including ourselves, I think you have to look at every single expense and see, what is essential and what is non-essential, and see, where can you be prudent, and do that quickly. And I think in some areas we move very fast. In some areas we're not moving fast enough. I think that's, very important. And then secondly, with our, and I'm gonna just go back to that first one again and not be in denial. Again, I really think as a community, all of our leaders, we can't be in denial that this is going to have a real big impact for a long period of time. And I've noticed in the country, you can see, at least in our company, leaders in certain markets are seeing this after others, right? In Seattle, they saw it first. And then, I was like, what's going on? What's the big deal, right? But then we saw it in New York and San Francisco, people in Florida and in some places in Texas were like, but they didn't feel it as much. I think this is very real. We have the Fed saying the unemployment can go to 32%. And that's greater than the Great Depression of 24.9%. And we saw unemployment, the jobless claims go out at 3.2 million last week, which is 4.5 times the weekly high in the history of the country. And so that's one half. The second half, I think, is on our customers, agents. And for us, it's how do you support them in this time? Support them, I guess, in terms of their business, but also emotionally. On the emotional side, it's how do you keep the balance of being realistic but positive? Yeah, it's a hard balance. And how do you ground ourselves in reality, have a vision of where we want to go and a path towards getting there? I think for us, we're the messages that we're sharing, which resonate, are after 9/11 in New York, things were really bad, but it bounced back. It bounced back really fast after a number of months. Same after 2008. It will bounce back. And in every downturn, great agents gain market share. You need to position yourself to be one of those great agents and be in front of your clients all the time. Give them advice, facts, give them good counsel, images, video, and this is a time to be there for your clients. And then the last point on how we're trying to serve them is virtually, with video conferences like this, with virtual onboarding, virtual training, something called Compass Academy, and virtual tools.
Hey, Hadi, you're in what, 10 or 12 states now?
Yeah, 11 states.
11 states.
And that's been an interesting thing. We're sort of 4 weeks into this, and we have now everybody remotely working from home, but the rules in every state are somewhat different. In fact, in some states, even county to county are somewhat different. So we're trying to get our hands around, consistent rules. Like up until yesterday, Virginia, there wasn't even a stay-at-home policy. It was just, they changed that this morning. But so as I look at it, there is, clearly of the people that I'm most concerned about is my family and our company, and our clients. And so I look at the fear that our agent base has and our employee base has of just basic where they're going to go economically in the weeks and months to come. And so we're trying to do some things to break that fear down. The question is how much we can teach people and how much we can have virtual sales going on, and most of the states, except for Ohio, now are all closed for house showings and things and open houses. But so how do we get people to want to buy homes? And hopefully the technology that we have with MoxieWorks has created that we're going to be able to do a lot more home sales and home listings than virtually than maybe we thought we could, and we're changing that almost on a daily basis.
Yeah.
The second thing is economically with, there is a great fear out there of getting this coronavirus, so we can't be asking our employees and our real estate people to do things that we wouldn't do ourselves. We don't think is in the best judgment to do just for their own health-wise as well as clients. And that gets difficult when you can't tell a client to go look at a house because, we don't think that's the best public health policy is to have them out looking at houses today. So we've done a couple things to help alleviate that being able to buy virtually. One, our money back guarantee program, which we've had for years, but really has seen tremendous uptick. And we're now opened that up to all sales that we make, whether it's our listing or not, which is a change, and giving people the sense of confidence that they can buy a house today, subject to maybe a home inspection when this thing clears up. And when they close, we will back them for 1 year on the value of the house, which is a risk factor, but that's the business we're in. The second thing which we've initiated, we have a thing called the income advantage, in which we will advance people in 12 installments the income that they made, half of the income they made the year before. So if they made $120,000 the year before, we advance them $5,000 a month, ongoing. And that shuts off, the sign up for that program shuts off December 31st. We opened it up, I think, the 5th or 6th of March. And naturally, that's been very well taken by people. They're calling on them. So, and then to Robert's point, we are trying to find costs without cutting into personnel and human resources. We're trying to cut costs out right now. And we've come up with a couple ways to do that. We've virtually gone back to all of our landlords, and we're about 25% of the landlords ourselves, and we've offered them a rent reduction for the next 3 months. And so almost everybody's taking it, and the ones that don't take it, they better take it, Yeah. And that's with all of our contractors. So, you got the emotional part of it, which is a big thing. and you got the factor of economics. And this thing, I don't know who mentioned earlier, this thing, I'm on the board of the University of Pittsburgh Medical Center, and I had a meeting this morning, and they think it will peak in Pennsylvania. Will peak in Pennsylvania in early to mid-July. So this is going to be, unfortunately, we didn't shut the whole country down, and this is going to be drip, drip, drip. And so, you know, when things will really open up here is going to be, that's a big question. And you got to keep cash at hand. And
it appears we lost Robert. I know he'll try to get back on. Matt?
Yes, sir.
You get the last crack at this, and I'll give you the first crack at the next question.
Yeah, I feel like I got scraps here to work with. They already touched on a lot of the things already, but you know, piggybacking on what they were saying, the other guys have said, there's a ton of uncertainty right now. There's a ton of emotion. I think honestly, a lot of that uncertainty isn't necessarily about the virus, but about the economy overall and what's going to happen, in the short term, but also in the long term. That's a big threat to us, I think, right now. And essentially our lives have become what's essential and what's non-essential, you know, essential or non-essential travel, essential or non-essential businesses, essential or non-essential expenses. And those are things that I think everybody's looking at right now. And certainly on that expense side, you know, I would be cutting everything you can cut that is non-essential right now. You know, obviously we've got a lot of aid that's come down the pike in the last few days. We're telling everybody take advantage of everything and anything because we don't know how long this is going to last. We don't know, what's coming at us right now. And so take everything you can, whether you need it or not right now, apply for it and get in there because you're probably going to need it sometime down the line. You know, and the other thing I've been doing is looking at other states, other cities, you know, other countries to try to get an idea of where we're headed in different areas. Because, you know, we're not all on that same plane. We're not all at that same peak time of this virus. And shutdowns too are sporadic. So I think if we can look at other areas that are ahead of us and kind of learn from them and what they're going through, how they're recovering, those types of things, that it can teach us a lot about the areas that, you know, we're in that are lagging behind them.
You know, so that leads into the next question. When I mean, I think this is on everybody's mind is, and you're, the four of you, some of the smartest guys in the business. What do you think, in your best opinion, best gut, whatever, what does the recovery look like?
Is this for me?
Yes, Matt, you get to go first.
You know, I wish I could paint a rosy picture. I would love to sit here and do that, but I think it's going to last a little longer than everybody thinks right now. I also don't know how we come out of this without some sort of after effects when you've, you know, virtually shut down the entire country. That's not to say that I don't think there's some positive in there as well. We obviously had a great economy prior to this. We've got a lot of pent-up demand in a lot of parts of the country. I think we can recover. I just think it's going to take a little while to do it. And, you know, to me, this is the big social and economical experiment. We've never done this before. We've never had anything like this socially before. We were talking about last night. I mean, I think divorce rates and babies and all those things are going to be going up because you've got people that plan their lives not to be with their spouse half the day. And now they're with them that half of the day and 24 hours a day. So, you know, things like that, you know, I think we're going to be living with for a little while. And it's going to take a little while to come out of this. So but nobody has a crystal ball. You know, this is all an experiment, and we've never done anything economically like this or seen things like this in the amount that it's already at, much less where it's going to go. I mean, I'm hearing figures of 10 million, 12 million easily by the time we're all said and done. So,
Hadi, what do you think about it? What's the recovery look like?
Well, pardon me. I think it's going to be longer. I think it's going to be, unfortunately, I think it's going to be as when you have people dying, you know, until that really slows down. And that's not going to be by, like I mentioned about the Pennsylvania thing, and that's, you can take that in every state. And as the states, they're not concerned about it right now. They're going to be concerned about it, and because this thing is just not going to stop. And I agree. You know, we've never seen anything quite like this. And with all these layoffs of people, you know, we're going to start seeing those same people who wanted to buy a house in March 2020. This thing bounces back in October of 2020. they're not going to be in the marketplace because they don't have a job, you know? And so, that unemployment is going to have a big comeback on that. And the longer we stay out with this, the slower it will be for the economy to come back. I agree. It's just a big problem. We got to be prepared. I mean, you would think with what we had, I would say most everybody on the phone, everybody who's listening to this call, probably had their best January and Februarys in the brokerage business than they've had maybe ever, if not, in the last couple of years. And it was going gangbusters, and we're going to have low interest rates when we come out of this, but, will it be enough? But I think I just throw this out to people. I'm sure everybody knows this. We had zero barred against our operation lines of credit on February 7th. Okay. We took everything down on February 10th, okay, or March 10th. And because that puts cash away, because when this thing gets really bad, you're going to have a hard time. Your lenders might not be willing to let you draw, So cash is going to be king, and to get through this.
Gino?
Yeah, I keep thinking what Dr. Tony Fauci has said, consulting for the government a number of times, that if you're not overreacting, you're underreacting. I was more optimistic until I heard my fellow experts here talk about that. I thought it might be 6 months or so where we could get back to normal. I mean, like Heidi was saying, we had a tremendous January and February, and March was great too. In fact, Steve, we're like, obviously HomeServices, we're in the mortgage business in a big way. And on the 15th of January was forecasting what we would make in mortgage. And it was $22 million. That's what you're going to make in mortgage for the month of March. All right. With the changes, when the servicing went away, that went to zero. Okay. For the month of March. So we probably still have had our best mortgage quarter ever, but, for the month of March, it's zero. So here's what I would say. I have no idea. I have no idea how long it's going to last and how deep it will be. I remember in 2006 being on CNBC, Kudlow and Kramer, and I came away with that we were in for a soft landing, and we had the worst recession, since the Great Depression. So don't really have an idea. We do have every single company turned in today their contingency plan with all the different cuts and things like that they were going to do. I will tell you this, back when I owned Intero in 2008, and you remember this, Steve, because I've shared it to you within the past, I cut $8 million out of an annual budget between 2007 and 2008. That was the good news. The bad news was I took way too long to do it. And I've really given that advice to our team and here that they need to get, just be smart and make the cuts that you need to make, quicker rather than slower.
Yeah. Robert,
I will add too,
go ahead.
during that, Steve.
Could you hear me, Robert, by the way?
Yeah. Yeah,
Okay,
I get
Go back.
Yeah, I will add, Steve, during that time, as you know, too, because I believe that's where your work ethic, your mindset, your work ethic, and your skills in these down times have a huge impact on your company. And, we grew 4.5% market share between 2007 and 8, and between those 2 years, 2007 and 8, where our biggest competitors lost that exact same market share. So question is I thought 6 months. I thought more of a U-shaped curve on the comeback, but after hearing everybody on this call right now, maybe I'm changing on that thought. In any case, that's it.
Robert, the question is, what does the recovery look like? And you're the last person to answer that one. I think you gave us a preview a little bit ago.
Yeah. Yeah. So look, I think, I think it depends a little bit on your market. In a weird way, I think the second home market could actually benefit from this. People, rich New Yorkers, for example, may not be going to Europe this summer. may rather have a home in the Hamptons they buy permanently. People may, sorry, think second homes will benefit because it will compete with international travel. I think people may want a second home. They could work from home there as well, and so even the homes they have can get I think in terms of the actual recovery, the way I would think about it is we're modeling in 6 months of 50% return. We saw our comparable brokerage firms in China see a 90% decline in transaction volume, although price is constant. It went down once and it's coming back, but they were faster to act than we were as a. And so I think for us, I expect to be more like 6 months. In New York, I think it'll be longer than in Seattle. And so I think we'll see people get back to work in Seattle faster, and places that took it more seriously. In terms of the economy, I think we're going to see a deep recession, the deepest recession we've ever seen, 30% down in GDP growth for next quarter. But I think we're going to see, on the flip side, the fast recovery and the steepest recovery we've ever seen, because there's so much money flowing into this problem, and there's so much stimulus dollars. And so I think for everyone on the call, the only goal is to survive. Like if you survive, any company that exists, forget brokerage. Any company that exists a year from now is going to do great. There are 32 million companies in the country. What percentage of them won't exist? And my heart goes out to all of them. You think about the small businesses, the restaurants, the gym membership, the music events, obviously hotels and travel. Most companies weren't set up to last this long without making money, just like most families unfortunately aren't either. And so that's why I think the sentiment on the call is just you gotta focus this. And then you just got to get to the other side. And if you're ahead, you're going to be great.
And actually, Steve, I'm going to tack on. I think Robert's right. I think we're going to see a good, strong recovery, unlike we did from the 2008 crisis. It took a while, but I do think we're going to string this out a little longer than what we saw in China, because we're trying to flatten that curve, and we're extending it, I think, just so that we don't have an overrun in the hospitals and too many cases to deal with at once. So I think that is actually going to prolong it, so we don't get the economy going back, at least partially, in the short term in areas that that can get back to work. I think we're going to be in more trouble than if we do. So I think we got to be cognizant of both the virus and the economy, because the economy kills people too, not just the virus.
So we've talked about this is incredibly useful to me. I'm sure we have almost 400 people on at this time listening and watching this. So you're up in front, you're now a CEO in front of your companies or your senior teams. What are the 2 or 3 most important actions that you're taking right now, like this week, this day? And Hadi, I'll let you start first with this, and then Robert, you'll follow.
Well, I think number one thing, we got to keep our people busy. We got to keep them focused on the task at hand, and it still is selling properties and mortgaging properties and closing properties. I think that's a big factor. And I don't think, I think we have to, maybe the best that came out of this whole thing will be the best is, I think, the use of technology. Getting a lot of the people like my age really using the technology that we have in front of them to really use it and use it to their advantage and use it to their benefit to make it simpler, easy, and less work to sell houses and to close properties. I think that's going to be one of the big winners here. And our job right now is to try to make people go to work every morning at home and try to get their job done and try to get through this thing in a positive way. I've heard numbers that, the May sales may be, written sales in April might be down by 30 or 40%, 50%. In May, it might be 70%, 80% in June. But I think we've got to do things to our own curve to stop that, okay? And to try to make people do transactions, make it comfortable for them to do transactions during this very difficult time. Long term, I think there's some great things. I mentioned technology. I think we're going to evaluate. I'm sure everybody on the phone's doing the same thing. The people that work for them, who's essential really to the job of real estate brokerage today, you know, and that might not be the same people who were essential 10 or 15 years ago. So I don't want to, you know, talk about people in our company. I wonder, you know, if their job is the same as if they're the ones that can't work at home today is a prime example. Okay, are they essential going forward to the operation? And I think we also have to look at our core. I mean, Gino looked at a little bit the core businesses. You know, I think we can create revenue during this time from insurance, from mortgages, and from, you know, we're projected during the month of April to close about 25 to 30% more mortgage loans than we were last April. Okay, and that reverts back to title also. So, you know, both of those numbers will be excellent next month. And I thought the servicing got settled last week, Gino.
No, not yet. Not yet.
I was told.
The mortgage
I was told Mnuchin.
The servicing's not settled yet, but they're working on it. Hopefully, in a week or two. I thought Mnuchin came up with a plan. Not to get off the target, but I thought Mnuchin came up with a plan the weekend. Well, Mnuchin is a mortgage banker. You know, I mean, he knows our business.
Yeah.
He knows our business.
Yeah.
All right.
So that's just some of the thoughts that I had on that. I mean, you know, we're looking at our offices. You know, our offices. You know, we've been in a 3-year making our offices smaller. You know, especially in North Carolina and New York State. And you know, do we need the space that we had years ago? You know, and we've seen how these people can work from home will give us a whole new idea of size of offices, where we should have offices, et cetera. So I think there's, you know, a lot of pluses that could come out of this that could be very beneficial long term.
Yeah. Robert, two big things when you're looking at your people, looking at your organization, what are the things you're trying to get everybody focused on? Two big items they got to really stay on.
Yeah, so like, I think it's first recognizing that what we're seeing here. Can you hear me? Yeah, I think what we're seeing here is a natural. Can you hear me, Steve?
Matt, are you there? Can you hear me?
I can hear
you.
No, audio's all gone.
Can you hear me?
Yeah, we can hear you, Robert.
Okay,
We can hear you, Robert.
right, you guys can hear me.
What happened?
So look, what we're seeing is a natural extension of trends that exist already, right? And so what I mean by that is
I can't hear
the trend of Netflix versus going to a movie theater, the trend of delivery food versus you know, going to a restaurant, the trend of Amazon versus getting keys and getting a car and driving and parking and getting stuff and coming all the way back. You know, the trend of video conference versus getting a plane to meet in person and do this all in person. You know, the trend of technology and you know, the trend of consolidation. I think there's an opportunity. What I'm trying to advise people is this is an opportunity to lean into the trends that exist already and not fight them. And I think that message can go to brokerage firm owners, but also to agents. The trend of video is so real. I hate doing video. I never want to do video, but I was forced to do it, and now it has a huge impact. I've interviewed tons of agents, asked them how they grew their business. The ones that use video, every one of them says that it increased their business, and every one of them said that they didn't want to do it. It made them feel uncomfortable, but then they realized it worked so much. So there are these natural trends, video, you know, virtual open houses is a great idea. You know, and so hopefully, you know, get excited by this environment and see what you can do that you could bring to your business. I'll give you the best piece of advice. One of the best pieces of advice I got for agents, and this came from an agent, is just do a text message video for 30 seconds to all your clients. Say, hey, I know it's a really challenging time. I just want you to know that I'm here to be supportive in any way I can. You know, we're thinking about you, and I look forward to seeing you when we all get out of this. This agent said the responses that he got have been like over the moon during this time. So again, the advice is use this opportunity to say, hey, how can we make our business better afterwards, and continue with these trends and learn, and then you just continue, whether you're a brokerage firm or an agent, doing as much relationship in person support as possible. In-person video conference in person, as opposed to just, phone calls and anything else.
Thank you for that. While we were doing that, my audio, I could not hear you, but evidently you could hear me. So I'm now on the cell. Okay. I think this goes next to Gino.
Okay. Thanks, Steve. And, I would concur with what Hadi had to say. But here's what I told our leadership team. Several years ago, Steve, I attended a training conducted by a friend of mine, Tom McCarthy. He was talking about, it was extraordinary leadership in uncertain times. And he was talking about the emotional impact leaders can have on their teams. And as he was speaking, a lady in the crowd, there's about 1,000 people there, asked if she could speak. And she introduced herself as a pediatrician and told a story about her first assignment out of medical school, which was on a pediatric oncology ward. And she said after several months of working there, she and the doctors could predict to a high degree of accuracy which children would respond to their treatment and which would not. The interesting thing is they could make this prediction almost immediately after meeting the children and the parents. So what they actually looked at was how the parents were responding to the health crisis that their child was going through. Some parents showed up distraught, afraid, lacking hope, while other parents of the children showed up with courage and confidence and belief that their children was up to the task of delivering whatever it takes to heal their body. The doctor said a significant factor in the children conquering cancer was based upon the emotional energy they were receiving from their parents. So while we're not the parents of our teams we lead, I would bet that your team, all the teams of everybody out there, is looking for you to provide them with emotional energy they need to not only be successful at their jobs, but have a positive impact on their families and the communities right now. So if with that, two of the most powerful human emotional needs for every human being are the need for certainty and the need for connection. And both of these are in short supply right now. And so that's what I've been trying to do to our leadership team and go over that, and essentially had basically pointers and things like that for them. And first started out with what Hadi and I talked about right in the beginning, is to take care of yourself and your family. In spite of the fact you're tremendously busy right now, you need to create rituals, ensure your health is in well-being. And Steve, you've heard me talk about the mindset routine talk that I do. Powerful rituals and routines can increase the strength of your immune system and help your emotional life. So there's all sorts of things that you can do, as simple as getting sufficient sleep, eating healthy, remember to exercise. Like right now in Silicon Valley, they've got us locked down till April 30th. So what I want every single agent to do is have a simple 30-day plan of what they will do in April, okay, for that to maximize everything there. So a lot of this is just giving them the emotional support and the leadership and the strength of, light at the end of the tunnel. So that's my 2 cents.
Okay. So the last question really, everybody get a chance to answer that? I kind of got sidetracked when my audio blipped out.
I don't think I did. One real quick comment.
Go ahead. Please do.
We had Brian Buffini at our conference speaking about a month ago, right before all this hit in Vegas. One of the things that he touts, obviously, is being there for your clients and doing things for them and being available for them. And this is that time. This is that time to connect your clients as an agent and really be there for them, right? So that they know you're there for more than just real estate. They know you're there for the long term. They know you're a confidant and somebody they can rely on. And that's what this time is. They may not be buying right now, but everybody needs all the help they can get. And so if you can do that right now, that solidifies that relationship for later when we do come out of this.
Okay.
And I think that's huge. So if you don't have business right now, that's fine. But your business is to be there for your clients, regardless of not having that business in real estate.
Yeah, I got to imagine you all feel the stress of your teams and your agents looking upwards through the ranks, if you will, but looking to you to go, how bad is this going to get, and when is it going to end, right? And we don't have that certainty, right? None of us know for sure. We just know it's not going to be pleasant, and it's going to last longer than we originally thought even a month ago. I think that's what I've heard from all four of you. This is going to go on. I know some people have talked about a V recovery I will just add this. Yesterday, I took a look back 40 years at 4 different housing recessions. And other than the 01, the 9/11 caused a little dip and sales came back. If you look at the early 80s, the late 80s, and you look at the Great Recession, housing did not recover in what somebody would consider a V shape.
Mm-hmm.
It did not recover. I mean, that's the history.
Yeah,
But
I went from Steve.
Yeah,
I
go
went from V to U. You know, a V shape to a U shape. All right.
Yeah. So here's a good question. So now we get to say, okay, we're going to get through this, and you 4 will get through it, and your organizations will get through it. I mean, having been at this 44 years almost as long as Hottie, you know, I'm like out there. Gino, you're a relative newcomer, right? What year?
85.
Did you enter the business?
85.
Yep. And Matt,
He is a young guy. I forgot.
And 91.
Yeah. 91. And Robert, you're
2012.
There's the pup.
2012.
And I was 1977. Hottie, what year were you?
Well, it was after college. I did sell real estate at high school, college, but I went full time after the service. 71, let's say, 1971.
We'll call it there. So there we are. We all got multiple generations. What, as you look out now, Hottie and Robert, I think all of you mentioned a little bit, what do you think really good change is going to come from this in how we run our businesses? Because, by the way, I look back and you know what? Out of every recession, the herd, I hate to say it this way, but the herd got thinned, and the incumbents and survivors did things differently once we got through it. What do you think it looks like on the other side?
Well, as Robert,
go ahead.
As Robert mentioned, we have to lean into this technology thing, and I think we've all been trying to do that, and so it might be following. But I think this is gonna make us really, really, as practitioners, all down the chain, really use technology to its fullest, and I think that will mean fewer office locations. That'll make fewer locations, period, and change, I'm not sure you're going to need to have an office in every corner, in every community to sell real estate in that metropolitan area.
Hottie, how many offices do you have? How many offices do you have?
I think 320, I think. And that includes about 50 franchise offices, 50, 60 franchise offices. And so, we look at all the time and, some of these offices, do you need an office there? And I think this is going to, when this breaks through, we get rolling again, we're maybe a little bit faster to close those offices. The second thing is, this is just something I throw out to everybody. The whole country, the last 5 years especially, has had this incredible movement back to the urban areas, back to, the downtown cities. And that's where most of the new construction's going on, whether it's Pittsburgh or Milwaukee or New York City or Los Angeles, it's just a big boom. And you wonder if that might not change, from what's happening. Robert mentioned about people buying second homes rather than going on vacations, are people going to move from suburbia or, as much to the downtown cities? I'm not sure it's good or bad. I'm just saying, will there be a little bit of change there? Because you're going to see this virus is going to be, New York's not the only big city that's going to have a virus problem here, And so I don't know if that's going to, it's too early to think that changes, but, everybody in this room, they're big urban areas where all the new construction's going on, where all the driving new market is going right now. So that's just some of the things that we're talking about.
Matt, what do you think about it? What does it look, because you built your company based on not an office, generally an office culture. What do you think going forward?
Well, we have offices everywhere. We got a lot of offices actually, but we try to keep them on a smaller scale, and more of them, I guess, is what our what we've done in the past, although that is changing quickly. As bad as it is right now, I'm actually excited in a lot of ways to come out of it, because during the last downturn, we grew more than we have ever. And I think it's the same thing this downturn. Our model is pretty recession-proof for the most part. So I'm pretty excited about that side of it, even though I think it's going to be rough for the next few months at the very least. But there's going to be a ton of consolidation, I think. Like one of you guys were saying, there's going to be a lot of restaurants, a lot of companies, a lot of offices closing down, things like that, and just a lot of consolidation, and that's sad in a lot of ways too. But I think at the end of the day, not just our business, but our lives are going to change profoundly. I think a lot of the things that we were starting to play with, much of it in technology, but a lot of the things, deliveries like that we were starting to play with and starting to get some traction, are going to just take off. I think this just pushed them to the forefront. We've had to jump into it, and now we realize that it is a viable way of life. And so I think you're going to see a big change in education, in real estate, in groceries. I mean, we're learning a lot through this whole thing, that I think it's actually going to be a positive in the long run, as negative as it's going to be in the short term. Because I think we're going to be light years ahead and push at least 10 years, in my opinion, in those areas. So I'm excited about when we come out of this. I just think it's going to be a little while before we do, and it's going to be a rough road, for sure.
Yeah. Hey, Robert, you work and you spend a lot of time both in Northern California and New York City. One thing that's been occurring to me is, and Matt just touched on it, do we all of a sudden just do Uber and Uber Eats and delivery, and I mean, not just our business, but do a lot of major corporations which stack people in high rises in a New York City or a Pittsburgh or a San Francisco, do they start more working remotely? Is this going to affect a lot of people, not just us?
Yeah.
Robert, from your view?
Yeah, look, I think so. And again, I think this event is just going to accelerate the natural trends that exist already, right? Even for you, I think you're probably going to get better Wi-Fi in your home office, right? Which is a natural trend already, right? Like I know I am, right? When it comes to brokerage firms, I agree a lot with Hadi and Matt. I think there will be, less off space, natural trend already. There will be more technology, natural trend already. But so there, and those are positives. I do think there will be negatives that are worth not hiding from. One, Matt alluded to is it's going to be massive consolidation. And I think people should really have a viewpoint on if there's going to be consolidation, where do they want to be on that? Do they want to be on the acquire side or the sell side? Do they want to affiliate? Do we want to affiliate with this type of company, that type of company, that type of company? But that is inevitable, right? Natural trend already. And it's going to be driven by other natural trends, right? Splits are going up and up and up, right? That's natural trend. As much as I'm excited by all the technology that people are going to be using, our agents in the field, they're just going to start realizing, hold on, what am I paying this commission for, this split for? Because I don't have the office. I'm using all these tools and video and all the stuff that I got, from Facebook Live and Zoom and so on. And so I think we're going to have a lot more pressure on splits out of this than we did even before, but that's just a natural trend. And I think that will drive to more consolidation.
Yeah. Gino, what do you think?
Steve, I don't see any significant.
What's it look like on the other
Yeah.
side?
I don't see any significant impact on the housing. Long term, the impact to the brokerages will be vast. I see a lot of them disappearing. This is an opportunity for brokers to become more efficient and make more significant progress towards a digital brokerage transaction. That's what I think we're going to see. But more than ever, consumers are looking to their agents for advice and guidance. Efficiency will most likely that'll be the impact that it'll have. We'll become more efficient. We're learning to work from home and to do that more efficiently. Like Steve, I got 900 locations, right? Companies across the country, I'm going to have fewer of those. So we'll do it with less space. but I think the crisis has energized our efforts to create a digital transaction, and that's pretty cool. And you know, we had issues with notary services when we were doing some of these you know, digitalized and transactions, but it seems like that's been you know, you pretty much can do that anywhere now. So I don't see too much of a change to the actual specific real estate. I see a tremendous impact on brokers that don't have the staying power and aren't a full service real estate company where you're providing mortgage, title, insurance, brokerage, and other services there. So that's my 2 cents on that one, Steve.
All right. We've covered the 4 main questions. Why don't I give each one of you, Robert, I think you get to go first this time. Just give us last thoughts you want to share with the audience. We're still holding at almost 400 people. So obviously the interest level is very strong in what you have to share.
Yeah,
Well, Robert, parting thoughts, so to speak.
Yeah, look, my parting thought is, you know, there's today and there's tomorrow. Tomorrow, I think I would focus on less because that's, you can fight that battle tomorrow. I think the goal is just to get to tomorrow, survive to thrive. Any entity that survives, brokerage, agent will thrive on the other side. And to get through today, again, I just focus on your expenses. You don't want to look back. You're not going to look back a year from now and say, I wish I didn't cut that cost. You're not going to do it. But you may look back and say, why didn't I cut that cost? So that's on expenses. And then really about focusing on relationships. This is a relationship business at the core. And as much as technology, brand, and all that kind of stuff matters, the reason I believe agents stay with their brokerage firms more than anything else is their relationship with their manager. Be in front of them. Talk to, have virtual video conferences like this with your offices. I would do it, if I were a manager, I would do it, every day, if not that, every other day, at least 3 times a week. I would have virtual happy hours, just really connect with your people. And I think people will be surprised. I'm closer to our company today than I was 3 weeks ago. And because I'm popping into video conferences every 15, 30 minutes, just saying hi for 15 minutes. And just being human. And so again, just focusing on the relationship, because that's what makes this industry special.
Okay. Gino, what do you think, friend?
I would say what I learned from 2007 and 8 is make your cuts fast. Make your cuts fast. Don't hesitate there. Certainly everything that Robert said, stay connected. And that's what we all are doing. At a minimum, a daily huddle where you're just checking on everything. But we have some of our management teams with three calls a day just to check in. Again, if you're not overreacting, you're probably underreacting. And I just learned that from the past of going through that. I will tell you this, your work ethic, your mindset, and your skills of your team is going to have a huge impact on you coming out ahead or not coming out at all.
Gino, I just want to say, I love what you just said. If you're not overreacting, you're underreacting. I completely agree with that. And I really appreciate that.
Matt, what do you think? Parting thought?
We're, to all of our agents and franchisees out there, we're business as usual, in all honesty. Our platform has allowed us to do that, the tech stack that we have, and we're still closing and paying people within an hour and all that good stuff. So as a company, we're business as usual. I know that their lives are disrupted. They need to hunker down a little bit, be very conservative, take every bit of aid that you can. If you're a 1099 employee, depending on the states right now, unemployment is available to you. At least from what I've seen, take it all day long if you can get it. You don't know how bad it's going to get. If you are a company, a franchisee, you are an independent broker, take what the government's giving you with the SBA loans that they're going to forgive. Go apply for all that stuff. It's worth it. It's going to help you get through this. And those that can get through this and ride it out are going to come out the other side, and it's going to be a sunny day, I think. Now, that day may be out there a little ways, but I think this is going to be a good thing at the end of the day for everybody. There's going to be a lot of opportunity out there for those that survive this. And that's kind of my message to everybody. Take what you can and just cut as much as you can, like Gino was saying. Be proactive on that. Cut your expenses. Live frugally as an individual, and you'll be just fine.
Yeah.
How do you get the last? Last statement on this.
We did a lot of work to outline how agents can apply for unemployment. We had some lawyers work on that. If anyone on the call wants me to send them what we gave to our agents, more than happy to give it to you. My email is robert@compass. But you know, I have a lot of agents asking, what do I do to get this? And I'm happy to share with all of you.
That's great. Thank you for that offer, Robert. I know everybody wants it. Hadi, you're the grand old man of the group here. You've been through a lot of these.
I never thought I'd be called that in a real estate group. I was the young guy for a lot of years, a long time ago. But I think everybody's hit on some great points, and you know, clearly, we got to get through this next 3 or 4 or 5 months, and companies should, you know, try to come up with as many cuts as they can. I think the bright spot of this whole thing is, I think we have not seen anywhere near the last of the stimuluses, you know, and we do have a president who wants to win re-election, and you can't win a re-election if you don't get this economy back rolling again, you know. And the way you can change that is FDR did, and as other people have done, is they've just put so much into stimulus packages that it could make it a V recovery rather than a U recovery. But as individual owners and practitioners, you know, you got to cut your costs right now, and you know, if you really want to think you got to hire people back next year, you can do that, as Robert or someone said. You're not going to be upset about tomorrow next year, but you got to get through this year. Keep cash, and be able to carry, you know, because none of us have done any kind of strategic plans or of having 70 and 30 and 80% less income, you know, coming in, you know. You do your worst case scenarios at 15, 20%, you know, and but this is, you know, it's could be, so you got to get through those tough months. So try to keep cash. As I said, if you have borrowing lines, take the borrowing lines now, because they may not be available to you 3 months from now or 3 weeks from now.
And you know what I'm going to tack on too? Gino mentioned a while ago, getting out and getting active. My schedule is so messed up right now. I don't even know what's up and down, to be honest with you. Like it just changes the routine. And I can't enough. Get out, get sun. You know, if you can, if you're in a place to do that, go in your backyard, whatever it is. And then try and stay on a regular routine. And it's tough right now. I know my kids are struggling too with it, but that's so important, is to stay healthy through this whole thing, and sane, because being cooped up in your house can definitely drive you a little bonkers.
I'll try to show my picture right now, what I'm looking at. It's a nice view of the Gulf of Mexico.
There you go.
Get that.
If you can see it, you know, if you can see it.
Hey, Steve.
I got nice sun.
Yeah, Gino.
Hey, Steve, in the wrap up, you know, because we all went through this market in 2007 and 8, and I was left with the idea that, you know, for our operators or any operators that are in that same position, I didn't want them to say what I said. And what I said was specifically this: I wish I would have acted sooner and made deeper cuts. That's what I said after the last one, when I looked back on it. I wished I acted sooner and made deeper cuts. All right.
Yeah.
Good point.
Yeah. So there it is, right?
Right.
One of my favorite thoughts when it comes to time, and I remember talking about it back at one of our conferences back in those 07, 08, 09, was a line from, I forget the actor's name, from Independence Day, when he said, "We shall not go quietly into the night."
Right. You know.
So gentlemen, you clearly are for the tough, smart people that we're going to be on the other side together. And the four of you will be there with a lot of other very good men and women who will get there. But it's not going to be pleasant. I think you've all driven home that point. And overreact, not underreact. What a great way to say it, right? Get on with it.
Steve?
And, yep.
I'm not sure how do you go back to work. I think in Naples. I said, I'm not sure you got to be going back to work.
Yeah.
Well,
Hey.
yeah. A lot of people say that all the time.
Steve, this reminds me.
Go ahead.
This reminds me of what old Jim Rohn told me one day. He said, when your outgo exceeds your income, your upkeep becomes your downfall. That's why we make cuts fast.
Well, listen, Robert, Gino, Matt, Hottie, thank you so much for your time today. I think this has been very useful. I noticed most of the audience is still there. We will get a copy of the recording to you very shortly. I just can't tell you how much, on behalf of all the men and women of the industry and myself, thank you for your time and your sharing today. So
Thank you.
stay well,
Thanks
stay
for putting
healthy,
it together, Steve.
stay safe.
Thanks for your
okay?
leadership and organizing.
Thank you,
Yep.
Steve.
Be good now.
Take care.
Thanks, Steve. See you, Hottie. See you guys.
See you guys.
Bye-bye. See you, Gino. See you, Matt.
Yep.